Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate jungle, and today we're diving deep into a filing that's packed with action from a merger to new leadership and some pretty significant financial moves. To our buckle up because Kindly MD Inc.'s latest Form 8K is a wild ride that could redefine the company's future. So what exactly happened here? Well, on August 14, 2025, Kindly MD Inc., or Kindly as they call themselves, completed a big merger with Nakamoto Holdings Inc. through a subsidiary called Mergas Sub. This means Kindly bought out Nakamoto, and Nakamoto now operates as a part of Kindly. The report itself is dated August 15, 2025, but it covers events that started happening as early as August 11, 2025. This is basically a company giving us the inside scoop on major changes that just took place. Now let's talk about what they actually do. Briefly, Kindly MD is involved with common stock, its basic building block for ownership in a company, and it has a par value of just 1/1000th of a dollar, which is pretty standard. The merger involved Nakamoto Holdings Inc. and Wade Rivers LLC. These are the other companies that are now part of the Kindly MD picture. The core event here is this merger that happened on August 14, 2025. Think of it as a big business handshake where one company essentially absorbs another. After the merger details, they got into some important agreements they signed. First up is a registration rights agreement. This is basically an agreement that gives certain shareholders of Nakamoto the right to have their shares registered with the government, allowing them to sell them freely. It's like getting a special permit to sell your stock in the public market. David Bailey, the CEO, is also mentioned here as having the right to have the company help him sell his shares if the amount is big enough, like $25 million or more. Then there's an assignment and assumption agreement. This sounds complicated, but it usually means one company is taking over the rights and responsibilities of another in a contract. Here, Kindly is taking over a marketing services agreement that Nakamoto had with BTC Inc. This means BTC Inc. now provides marketing services to Kindly instead of Nakamoto. This marketing contract is pretty important because it involves things like advertising and marketing services, and even some options for the companies to buy or sell shares from each other under certain conditions. Next is a big one. They issued a convertible debenture. This is a type of debt that can be turned into stock. This particular one is for $200 million and it's secured by Bitcoin, meaning if Kindly can't pay back the debt, they have to give up Bitcoin to cover it. That's a pretty big deal and shows their connection to the digital asset world. The investor who bought this debenture can turn it into Kindly's stock at a price of $2.80 per share, but there's a twist. They can lower this price if the stock price drops, but there's a floor price of $2 so it doesn't go too low. Kindly also has the power to buy back this debenture under certain conditions, like if their stock price is too low. It shows they have some flexibility in managing this debt. Now, for some less positive news, there was a notice from the Nasdaq Stock Market LLC. They are delisting Kindly's tradable warrants. These are like options to buy company stock. The reason given is that they didn't have enough holders for these warrants. This means the warrants will be traded somewhere else, not on Nasdaq starting August 15, 2025. So the warrants are moving from the main stock market we all know to a less regulated over-the-counter market. This isn't ideal for the warrant holders as it might mean less liquidity. This section talks about selling company stock that wasn't registered with the government. This usually happens in private deals like the recent PIPE financings. The PIPE financings are a major part of this report. This is where Kindly raised a significant amount of money, around $540 million, by selling shares and special warrants called pre-funded warrants to certain investors. It's a way to get cash quickly. Scroll. The acquired securities were issued in a private placement in reliance upon an exemption from registration, Tapir Section 4A. 2 of the Securities Act of 1933. Scroll. These new shares and warrants were sold in a private deal, meaning they didn't have to go through the full government registration process, which is common for large private placements. This is where they announced changes in who's running the company. First, several directors, Adam Cox, Gary Seelhorst, Christian Robinson, and Amy Powell, all resigned from the board. This often happens after a merger as the new company structure takes shape. But then they immediately appointed new directors: David Bailey, Charles Blackburn, Perrianne Boring, Eric Weiss, Greg Zithalis, and Mark Yusko. This new group has a lot of experience in finance, digital assets, and technology. Let's look at a couple of these new directors. Chad Blackburn is 44 and has a strong background in raising money and developing businesses. He's an investor partner at an angel investment firm and serves on the board of a national accounting firm. Perrianne Boring is 37 and she's a big name in the crypto world. She founded a non-profit to support the crypto ecosystem and ran a blockchain trade association for a decade before that. Her expertise in digital assets is clearly valued. Eric Weiss, age 54, is a founder of a hedge fund focused entirely on blockchain assets. So he really knows his digital currency investments. Greg Zithalis is 48 and he's a lawyer with 20 years of experience specifically in corporate and regulatory matters within the Bitcoin and digital asset space. He's also a professor teaching fintech and blockchain law. Mark Yusko is 62 and he's a seasoned investment manager with over 2 decades of experience. He's the CEO, Chief Investment Officer and Managing Partner at Morgan Creek Capital Management, another investment firm. You'll also notice he participated in the PIPE financings, putting his own money into the company. This means Mark Yusko bought a significant chunk of stock, 2.1 million shares, right around the time of the merger. Also, Tim Pickett and Adam Cox stepped down from their CEO and COO roles respectively. They are not leaving due to any disagreements. Tim Pickett is staying on as a director and will be the chief medical officer, which is a key role, especially if the company has any healthcare related aspects. And who takes over as CEO? David Bailey at 34 years old. He has a background in finance and entrepreneurship and is also a co-founder of BTC Inc. and a general partner at UTXO Management. It's interesting that David Bailey will be paid through a consulting agreement with his own company, BTC Consulting LLC. He's going to get a monthly fee, a potential bonus, and stock options worth a lot of money. Then there's Tyler Evans, who's 33 and becomes the Chief Investment Officer. He's also a co-founder and director at BTC Inc. and managing partner at UTXO Management. Tyler Evans gets a substantial annual salary, a bonus, and significant stock options as well. This shows they are investing heavily in their leadership team. Andrew Creighton, age 53, steps in as the Chief Commercial Officer. He has a lot of executive experience and has served as secretary for Nakamoto Holdings Inc. and interim Chief Commercial Officer at BTC Inc. And Amanda Fabiano, 38 years old, is the new Chief Operating Officer. She's got deep experience in the Bitcoin industry, having worked at Galaxy Digital and Fidelity Investments. The company also approved a new 2025 equity incentive plan. This plan allows them to grant stock options and other stock awards to employees and directors. This is a standard way to incentivize employees and align their interest with the company's success. They've reserved over 37 million shares for this plan, which gives you an idea of how much equity they're planning to use as compensation. The company also made some changes to its foundational documents to and authorized shares, an increase in authorized shares from 110,000 shares to 10,110,000 SEF to 10,000 shares of preferred stock, par value 0 treat 0. One of the biggest changes is a massive increase in the number of authorized shares, going from 11 million to over 10 billion to over 10 billion. This is likely to support future stock par value 0.01 per share. And initial ICU, one of the biggest changes is a massive increase in the number of authorized shares, going from 11 biggest changes is a massive increase in the number of authorized shares, going from 1110 million to over 10 billion to over 10 billion to over 10 billion. This is likely to support future stock offerings or equity awards without needing shareholder approval for every single issuance each time. Initial shareholder action by meeting only. The addition of a provision stating that any action required or permitted to be taken by the shareholders of the company may only be effected at a duly called annual or special meeting of shareholders and may not be effected by written consent. This is a way to ensure more formal shareholder engagement. Initial exclusive forum provision. The addition of a provision stating that all actions should be brought exclusively in the United States Court in Salt Lake County, Utah. Yonah Nichelle State Court in Salt Lake County, Utah. Yonah Nichelle on David they've established an exclusive forum for legal actions, meaning lawsuits can only be filed in specific courts. This can help streamline legal processes and potentially reduce litigation costs. They've also updated their code of ethics and business conduct. This means they're making sure not just employees but also consultants and contractors have to follow strict ethical guidelines. Initial conflicts of interest. The code now provides additional examples of situations that could present a potential conflict of interest for persons subject to the code and clarifies the procedures for seeking guidance and approval in such situations. Say initial, they've added more examples of what counts as a conflict of interest for people working with the company and how to get approval for them. This section is basically to announce some press releases they've put out about all these events. And importantly, as of the date of this report, the company has about 376 million shares of common stock outstanding. This is a key number to keep in mind. They're also talking about launching a new digital asset treasury strategy. This means they plan to buy more Bitcoin and use it as a main reserve. Their strategy involves strategic initiatives to acquire Bitcoin. Initial, amended and restated clawback policy initial. The company has also updated its clawback policy. This policy is about getting back incentive compensation that was paid out incorrectly. For instance, if a company executive was paid a bonus based on bad results and then those results are corrected, the company can claw back that bonus. Initial expansion of covert executives. The definition of covert executives has been expanded to explicitly include current and former executive officers as defined by Section 10D of the Exchange Act, Rule 10D1 and the applicable National Securities Exchange listing standards. And an initial steers will include current and former executive officers to comply with new regulations. Initial amended and restated. Insider trading policy, this is to prevent people from trading company stock based on secret information. Welcome back to and the Camdron from JHR at on secret information. Initial expanded scope and applicability. The policy now explicitly covers trading in securities of other companies if such trades are based on material, non-public information obtained through the company. This highlights a more robust approach to compliance. Original Big Size Status Original Kindly MD is also a well-known seasoned issuer, or WKSI. This means they're a big enough company to use special faster ways to register their stock offerings, making it easier and quicker for them to raise more money in the future if they need it. Finally, this section just lists all the documents attached to this report. These are the actual agreements and filings that back up all the information we just talked about. Original merger agreement dated as of May 12, 2025. Original to these exhibits are the legal documents that make all these changes official. So that's the big picture of what happened with Kindly MD Inc. They've gone through a major merger, brought in a new leadership team and made some significant financial and structural changes. That now let's talk about what this all means for Kindly MD. The merger with Nakamoto Holdings Inc. completed on August 14, 2025 is the biggest news. This acquisition will likely reshape the company's operations and strategy. The influx of new leadership with extensive experience in digital assets like David Bailey, Perianne Boring, Eric Weiss, Greg Zithalis and Mark Yusko suggests Kindly is deeply committed to the digital asset and cryptocurrency space. This new board and executive team is packed with people who understand this evolving industry. The $540 million PIPE financing is a huge vote of confidence from investors though. It does come with a significant number of new shares and warrants being issued, which could dilute existing shareholders' value in the short term. The $200 million convertible debenture secured by Bitcoin is a bold move signaling a strategy that embraces digital assets as collateral. This debenture can be converted into stock at a price that can adjust downwards, but has a floor price of $2, indicating some protection for the investor, but also flexibility for the company. However, the delisting of the warrants from Nasdaq is a red flag. While the warrants themselves aren't worthless, moving to the over-the-counter market generally means lower trading volume and potentially less investor oversight. This could make those warrants harder to sell and their price more volatile. The massive increase in authorized shares from 110 million to over 10 billion is a strategic move to give the company more flexibility for future fundraising or stock-based compensation. But it also means future issuances could be very dilutive if not managed carefully. With the new leadership team, particularly those with strong ties to the digital asset world like Perry-Ann Boring and Mark Yusko, kindly MD, is clearly signaling a pivot towards or a deeper integration with the cryptocurrency market. Their digital asset treasury strategy points to Bitcoin as a core part of their business plan. This is a high-risk, high-reward strategy. Given the volatility of cryptocurrencies, the company's overall direction seems to be towards specializing in or becoming a significant player within the digital asset ecosystem. The appointment of experienced executives and the focus on digital assets suggests a clear strategy, but the success will depend heavily on market conditions, regulatory changes, and their ability to execute these plans effectively. A notable risk is the company's reliance on volatile digital assets and the potential dilutive effects of their financing activities. The delisting of warrants also raises some concerns about the health of their smaller trading instruments. The strength lies in their new leadership's expertise in the digital asset space and the significant capital raised. In conclusion, kindly, MD is making bold moves aiming to capitalize on the digital asset boom with a reshaped leadership and a strong financial backing. However, the path ahead is likely to be volatile, given the nature of cryptocurrency markets and the potential for shareholder dilution. What do you all think about Kindly MD's strategy and these recent changes? Let us know your thoughts in the comments below. If you found this breakdown useful, give this video a thumbs up and subscribe for more corporate deep dives. Don't forget to join our Discord community in the description to keep the conversation going. Thanks for watching. See you next time.